if you were looking to buy, I wouldn't do anything differently than what you've been doing. I mean, rates, if you zoom out, you're still, I'm still quoting people in the fives on rates. Like, we didn't jump up to 7 like we did a couple years ago, and we had a bunch of crazy stuff happen.
What's up, y'all? Welcome back to the Austin Home Guy Podcast. I am your host, Derek Peterson, and today I'm joined again by Jonathan Sarver of Hill Country Mortgages. Welcome, Jonathan.
How's it going?
Yeah, nothing like the most watched podcast by this guy.
Yeah.
My
wife's favorite podcast.
The most watched real estate podcast by the guy that's hosting it.
Yeah.
Well, I wanted to jump into this a little bit because obviously the situation that we have going on in Iran with the U.S. has rattled some things in the interest rate and bond market world. So walk me through what the last week or so has looked like for you.
Yeah, so it's been interesting to say the least. So, going into Friday, everyone's talking about how, rates had been around 3-year lows. I made a cheeky post about like, I've been closing rates this low for a couple months, whatever. And then, going into Friday, not to get too on the political side, but I'm watching all the cues. I was like, it was going to happen. Like there was, the Prime Minister of India was in Israel. I was like, they're not going to do it while he's there. And he left Friday. I was like, market closed Friday. We're going to wake up Saturday to something. Lo and behold, we did. And, a lot of people were speculating that, well, this could trigger a flight to safety, from stocks to bonds for a military conflict. But people weren't factoring in that based on where this conflict was, the oil was going to be a huge factor. So pretty much what we saw from Friday to Monday is we went from, the 10-year treasury was below 4, which is great. That was great news for it. Immediately went back above it. Now, not to be fully doom and gloom, we're still, if you zoom out on the chart, we're pretty much what we were first week, second week of February. So we did lose ground from Friday to Monday because what you got to focus on is, oil prices going up can lead to inflation concerns. Inflation concerns can lead to bond sell-offs. Bond sell-offs puts pressure on mortgage rates to go up. So a typical flight to safety would have been 2 bonds, which would have helped. But with concerns always being about inflation, and that's all the big data points we always look at, that's where we're seeing kind of like everyone's holding their breath, wanting the situation to be resolved. We did get beat up Monday. Yesterday got beat up a little bit. Today's holding steady is great. Data today with ISM and PMI for like global manufacturing stuff came out, wasn't too hot, which is great. So that didn't burn us. So that was a concern this week as well. There's, ADP jobs numbers came in as well. But so far data has been friendly. We could be a lot worse off, but what I'm telling people right now is we're pretty much back to February, which was still great if you look at the last 3 years. So it's not, now it's all going to boil down to how long does this conflict take to resolve itself. So that's where the concern is.
Yeah, that's how this goes, right? And we when we get into, I mean, to me, this has been a frustrating process in general with what's happening in our country and in our world, because it's like, man, it's as soon as it feels like we get a little bit of relief, right? As soon as we feel like interest rates are finally coming down a hair, we started to see, the last couple of weeks, we started to see more and more buyers jump into the market, a couple properties going into multiple offers, like good properties are selling quickly. That's exciting. Like, there's like a little bit of buzz around people getting back into a property. And then, lo and behold, we had some clients that we met with on Monday, and we're showing them houses, and, we showed 3 houses, and while we were chatting after the 3rd house, they're asking real questions about this, like what's going to happen with interest rates. Is now the right time to buy? We're thinking about pausing our search for a minute just to see how all this stuff plays out. And, that's the part of this that's the hardest to swallow, is just the uncertainty, the economics of it, right? The people that pull the levers on this stuff based on their political power and their situations, it ebbs and flows. lows, and it tends to go back and forth depending on who probably needs what. you know,
Right.
we're we're a puppet in their game, but
Yeah.
even so, we're trying to figure out the best way to play it still. So, what advice would you give to buyers that are still maybe on the fence at the moment? Is there anything you would tell them?
Yeah, I mean, yeah, it's hard because you don't want to come off as a salesperson, even though at the end of the day, that's what we are, right? And it's
Yeah,
I want people to buy, I want people to refinance. That's how I live. But to me, I don't, you know, I understand people's concerns about it, but at the same time, if you were looking to buy, I wouldn't do anything differently than what you've been doing. I mean, rates, if you zoom out, you're still, I'm still quoting people in the fives on rates. Like we didn't jump up to seven like we did a couple years ago when we had a bunch of crazy stuff happen.
yep,
So it's nothing on that thing has changed. Now, could things get worse? Could they go up? Sure. Could they also go lower? Yes. I mean, there's a lot of things sooner or later, the Fed's going to have to start printing more to pay off our debt. And, short term, that could be fun for rates and good for, you know, real estate, but long term, yeah, it's not the best news. But
yeah.
so I always tell people there, I said, oh, what do you think's going to happen with rates? And I always tell them, if I had a crystal ball and I could tell you exactly, I'd have already retired.
Yeah.
But like to me, it's like if you've been in the process and you have a lease coming up or like this is the year you want to buy, I wouldn't change anything on that. If you got pre-approved last week, I'm not telling people, oh, you got to double check if you're still approved. Like we have not seen that big of a shift. There's not been that dramatic thing. We're still going to be data dependent. It's now what's going to happen with oil is a big thing, but is it Strait of Hormuz or how do you pronounce that?
Strait of
Really
Hormuz. Yeah,
close or not? Like what I keep in this day and age, there's so much information, but so much of it is just blatantly wrong or misleading on purpose.
yeah,
Iran saying they're closing it, but and the other thing is, Lloyd's in London essentially pulling all the insurance for the shipping. That's what's really closing it, not Iran. So it's like, okay, well, I know the U.S. has said like, okay, we'll start issuing insurance for it, and like, so it's if that gets worked out and oil doesn't keep spiking and that comes lower, then a lot of those concerns do go away. But there's just a lot of unknowns out there. So, but I wouldn't factor that into stopping my house hunt. I mean, if it's
yeah,
the lease coming up, I wouldn't sign a new lease because of this at all. Like you didn't see a big enough change in your rate from last week to this today.
yeah.
And
Well,
it's
and
still
yeah, and
holding
then we go.
0.1 on the 10-year.
Yeah, exactly. And then we go back and forth, right? We get back into the silo we've been in for the last year where we're like, okay, let's manage rate expectations, ask sellers for buy downs, and in hopes that refinancing, gets delayed a little bit, and likely ends up like if rates go up a little bit again, there's a good chance they still come down, in the next, what 6 months or so,
Yeah.
and we may still find ourselves in a big refinancing period. And for anybody that, to be honest, and I will say this, like the best time to refinance is within the first couple years of purchasing, right?
Yeah,
Because
see,
you're
because it reset that 30-year. I mean, then I actually had this conversation the other day, and there are some lenders where we can offer, custom terms. Like I had one guy give him a 27-year loan. Like, so there are lenders that do let you do this. So you don't restart it. Or, you tell people like, okay, well, if you just make your same payment you've been making, that extra goes towards principal. You're not losing any ground that way. But yeah, I mean,
yeah,
but the good thing is based on the last 5 years, anyone refinancing now, unless they're doing it for a cash out or other financial reasons like that, they've not been in it that long also. So
yeah,
it's restarting at that point. It's not a big deal, especially, make a couple more payments at the same payment with more towards principal, you'll catch back up. But yeah, you're exactly right. That is something you always factor in with people is, you are restarting it. And then, I have a comparison tool I work with people on, because people's like, oh, how much lower does rate have to go for it to make sense? I'm like, if it makes sense to you, it makes sense. Like, so I always go based on your hard cross to break even period. Like that
yeah,
has to make sense. Like if you're not breaking even in under 3 years, you should not be refinancing. You should
yeah.
not be picking points to refinance.
Which is
Uh,
usually about 1%, right? I think most of the lenders I've talked to have said in the past that, if you're about 1% lower, then you're usually in a really good spot to
yeah, I
refinance.
mean that's definitely good. A lot
Well,
of it, loan amount depends on it too, because like
yeah,
someone that a $200,000 mortgage dropping the rate half a point isn't going to do anything. Someone that's at $1 million half a point it's going to do a lot. Like it's you
Yep.
break even period on hard costs. You want to try to keep that. My goal is to try to keep it close to a year as possible. Under 2 years is really good. Under 3 years, look at it, but then you have to see, like, okay, but if I plan on moving in 4 years, is it worth it? So
Yeah.
it's all about your cost to break even, time you're going to be in the home. Those are what the factors to look at, not so much what's my rate to rate.
Yeah, and there's really two kinds of like refinances, right? There's the people that need to refinance to get relief on their monthly payment, and then
Mhm.
there's people that don't necessarily need the relief on their monthly payment, but when the math makes sense, they may refinance, but they also may refinance into a 20-year or a 15-year
Yeah.
because like it just makes sense because rates are better, they can get a better deal, they
Mhm.
don't need the relief on the monthly payment, but they're actually now they've reduced 10 years off their loan,
Yeah.
and they're paying maybe $100 or $200 more a month,
Yeah.
and but have 10 years less on the loan, so it makes sense
Yeah.
in those instances, right?
Yeah, I've had people, you always hear the stories like, oh, people are locked into their homes with, if they have a rate in the twos or threes. I mean, first of all, I've helped multiple people, like most of their clients are still buying, upgrading his house size, but I've even done cash outs for people that had a rate at around three and they got a rate in the low sixes because we're paying off, 25% interest credit cards. So
Yeah.
I mean, one person, I literally doubled their rate, but I improved their cash flow by $2,500 a month. So
Yeah.
refinance just has to make sense based on what you're looking to do, the goals you're accomplishing. So it's, rates there, but if you have $70,000 of credit card debt paying at 29%, going from 4 to 6% on your mortgage might make sense in that situation. Talk to your financial planner, talk to us. We always look at the numbers, and I have had lenders of mine reach out and be like, "Hey, have you talked to your past clients about refinancing?" I'm like, I monitor my database completely. I've been doing a lot of refinance right now, but I don't talk to all my past clients just because they have a rate at, you know, 6.8 because the break even doesn't make sense. The math's not there. So
Yeah.
we're never just going to churn and burn people. And there's plenty of online lenders that try that and they're like, oh, look at this rate. And they sneak all the fees in. Like, you're never going to break even. So
Yep. Yep. Well, that makes sense. So let's leave on a positive note.
yeah,
Is there any have you locked any rates in the last couple days? Any locked anybody in?
yeah.
And if not,
I
that's
got
okay.
I locked in a refinance last night at 5.75, I think.
There
And
we go.
I got a couple
Yay.
today that we quote on. But yeah, I mean it's very easy to be pessimistic in this industry and in this life.
Especially when especially
Yeah.
when you've been in it as long as we have.
Yeah.
Yes.
It's kind of like I told a buddy earlier this morning, I was like, I just hope it's not a situation like September 2024. Because what happened then, a lot of people that should refinance and they're like, oh, let's wait. And then everyone knows we started 2025 at 7%. So
Yep.
I don't think we're in that situation. I think data's on our side. I just hope hopefully for world peace, as cheesy as that sounds, I just want, everything to calm down.
Well, and I think the one thing we have coming up, if election years, midterms, typically everybody's trying to put their thumb on the scale to sway things their direction. So in general, that's a good thing. Like if your policies are finally trying to help the American people and things get more affordable to get yourself elected, great.
Yeah.
If the American people are the beneficiaries of that, that is great. And so,
Yeah.
yeah, I'm hoping that we see some more of that over the course of this year, and that our things do become more affordable, interest rates come down, and we
Yeah.
can actually hit a little bit of a stride here, because I miss it, man. I miss when my job was I'm okay with stressful situations, but I miss when we just had like a regular flow, you know what I mean,
Yeah.
where we weren't
I
having these
totally,
pendulum like
uh,
everything all at once and then nothing at
yeah.
all, and then everything all at once and then nothing at
Yeah.
all,
Like, just
you
let,
know.
yeah, I don't care if rates go down or up. Just give me these rates for a week at a time.
Yeah.
Like,
Exactly.
I just, yeah,
I'm like, can we
yeah,
just lock it? Why don't we just agree to everybody? Like, hey, let's just
yeah,
lock in like a 4.9 rate for 2 years. Like,
yeah.
no matter what, let's just leave
Yeah, everyone gets
rates.
that,
Let's look, everything at 4.9%. That
yeah.
stabilizes the market across the United States. All right. We're just under
I
5%. The fours tend to be like that sweet spot where pricing is at the moment. So, like, I think we would all collectively be okay with that.
I mean, I think in a
That'd
perfect
probably get
world,
me and my wife to sell and purchase again. So
yeah. Yeah, I mean, I might look at, I got a pretty sweet rate on my house that, I did my own loan, which helps.
yeah,
But yeah,
is that legal?
yeah, it is. Yeah, it is. I still, I'm still optimistic about the year. I mean, the year started
Yeah,
off great. I mean, I've started off way hotter than last year, and there's a lot of people out there shopping. It's just, people got to be willing to make deals to keep things going, and I think they are. And
yeah, I
I
agree.
still,
I'm busier than I've been in a long time, so I'm hoping that is a good sign for the rest of the year, and hopefully, everybody doesn't just hit the brakes because of all this and stop. But I think you're right. I mean, we've already had 2 years of relatively pent up buyer demand, so I do think that we're going to still see a little bit more activity, and hopefully interest rates come down enough to help that out. But man,
yep.
great talking to you as always, and yeah, we'll catch up in a few weeks.
All right, sounds good. I'll talk to you.
Talk to you later.